Okay, hello everybody. Welcome to Korean Atlanta Mentorship. And in this video, we're just going to do another velocity banking review. So, what is velocity banking? All it is a debt payoff strategy where you throw all of your money, all of it, into a line of credit. You throw all the monies, all of it, all the monies, okay? All of it into a line of credit. And so every time you look at your bank account balance, you'll feel a little different from the average person because the average person, if they see a zero, they'll be like, oh my goodness, the world's gonna end. Whereas like if I see anything above zero, unless I have a specific reason for keeping that money in a checking or savings, I'm gonna have a heart attack, right? So what we're gonna do is dump all of our money to debt with the help of something called a line of credit. And what's a line of credit? All it is a financial tool where you could borrow money, pay it back, and use it over and over again. So I can literally go to the bank's website, click a button, and they'll lend up to 280,000 in an instant. I click a button, bam, 280,000 in my checking account, and they're charging me a 7.5% interest rate. 7.5%. And a few other benefits, at least for me, I want to talk about is that it allows me to make a couple $100 a month. And if you take a look at these YouTube statistics, and let me just zoom in here, I'm making about at least $200 a month, and my typical month is about 300 or 390. Isn't that cool? All I do is just spreadsheets and I just talk and I get an extra couple $100. Now, let's go ahead and do this. And I'm going to just show you, okay, the other benefit, which is that it's a cult recruitment tool for me. You see right here, VB cult member. You have spoiled this great leader. We anticipate daily videos. We are a cult. Um, the cult is growing as a member of the cult. So this is kind of my secret nefarious agenda to recruit some cult members that are financially free, debt free, right? I mean, wouldn't you want to be part of a debt free cult? I feel like your workplace, which many people would argue is a cult, doesn't want you to be debt free because they want you to keep going to work, right? Hey, and I don't mind going to work as long as it's in my own terms, right? You go to work because you want to, not because you have to. And if you're debt free, most likely you only go because you want to. Okay. All right. So let's go ahead and do this thing called velocity banking. So, what is velocity banking? I already talked about this. So, first thing you got to do is type in your income. And then what you do is you do an expense breakdown and list every single debt that you have here. So we see we have 10 credit cards, an auto loan, a student loan, a mortgage, right? And here's the other thing too. I know people look at this and they're like getting a heart attack because they see $10,000 of income, right? After tax, and they're like, there's no way that I'll ever do that, right? And you have to understand debt is always proportional to income. So it doesn't matter whether you make 10 grand a month, 5 grand a month, whatever, but the more income, the better. And we also have to understand that velocity banking is not an income generation strategy, it's a cash flow management, debt elimination strategy. And the other thing, too, is let's say you're not making income or you're making very little of it, banks will avoid you like the plague. They will avoid you like the plague, right? Because banks don't lend money to people who need it. They don't. Like, you have to understand that they don't lend money to people who need it. Banks don't do that. That's why when people look at this, like, how do I get a line of credit? The answer is you don't, because at that point in your life, you need the money. And I say this as a guy who has over $579,000 in lines of credit. You know what my secret is? I got the money when I did not need it. Too many people get the money when they need it, and that's why they fail with finance and credit, right? That's why they fail. I got the money when I don't need it, right? They don't lend money when you need it. They don't. Not a restaurant. A bank is not a restaurant. You see, a restaurant will feed you when you're hungry. Nope. A bank will not lend you money when you need it, when you need money. Okay. All right. So I'm wondering if I should do this $10,000 income, but I always love the dramaticness of doing these demonstrations because like I was like, hey, if you have one penny left over in your savings and you got all this credit card, all this debt, can you still survive with the same income, right? You just redirect your flow of money. And so again, I love this part where I just show the same income, okay, same income. And remember, it's all about the zero savings. I don't need the savings. In fact, if I take a look at the YouTube poll that I just recently did in our community, and let me just do this right here. Let's see if I can find it here. Content, posts, right? Let me go here. I asked, what's the most important velocity banking revelation for you in our community feed? And 39% of you, the highest answered option was you don't need any savings. You see this right here? You don't 39%. That's like the biggest revelation for most of you. And again, these are pretty important too. That the fact that lines of credit even exist because all people know are the only type of line of credit that people know are credit cards, and that it's easy. See, this is the three main benefits. Don't save money, easy debt payoff, and you got this cool thing called a line of credit, right? So you don't save any money, but we have this thing called cash flow, okay? Cash flow. And this is the best part, okay? This is the best part. We're going to assume we have access to a $200,000 free and clear line of credit at 8%, which is not going to happen if obviously if you are only one penny left, because that's like the point when you need money. But let's do a debt transfer. Okay, 10 credit cards. We move it into the line of credit, and 167000 right here. Okay, 167000. And guess what happens when you do debt transfer? Okay, look, take a look at this. This is I gotta get an editor to help me make this more dramatic and maybe put this as like a YouTube short. But take a look at this. 0, 0, 0, 0. Oh my goodness. Okay. Well, take a look at that. And we literally went from a penny to $5,345 based on how we redirected our money. And then we put our entire paycheck, the entire $10,891 into the line of credit. And it does two things. Number one, it satisfies the minimum monthly payment. So who cares about that, right? Number two, it minimizes the average daily balance, right? It minimizes the interest because the interest is based on the average daily balance of the line of credit. And then we just rinse and repeat over and over again, okay? So let's go ahead and do this. And I'm going to do this. And we're going to take the next month's balance, which is just the previous month's balance plus the interest minus our cash flow, 5345.84. I mean, I am so impressed by this. We literally went from a penny. Do you know any other strategy without making more money where you just go from a penny to 5 grand? Like, do you know that? Like, I don't know that. But there are a lot of people here. There are. In fact, I reviewed a TikTok video about a nurse who was like, I make good money. I make good money, but I'm just making minimums on my credit card payments and I don't understand why I'm broke. And I'm like, okay. See, the bank's best customer is not someone who is super financial responsible. It is somebody who is making good money, but is kind of dumb with managing their money. Kind of deep, right? Like, I didn't know this. Like, it's like, this is why, like, making more income is kind of like a trap for most people because the bank just, I don't know if you knew this or not, but the credit bureaus just essentially sell off your information to other third parties, and there's a reason why when you pay off like your debt, you just get more offers in the mail for debt, and you probably take it too, and that's what they're expecting, right? They expect you to get the debt when you don't need the money, and then you get it, and you're like, "What the f happened to my life?" Right? All right, so let's go ahead and do this again. I love the dramatics of going from a penny to 5,000 whatever, right? And if you want to get the interest, it's based on the average daily balance multiplied by the interest rate, and you divide by 12. And then you copy and paste all of this, right? You copy and paste. And I'm going to do this. And then we see that in 35 months, it is all paid off. 35 months, okay? 35-month credit card bill. It is all paid off. So let's just write a milestone right here. Milestone, 35 months, and it's 167K of credit card debt. All right. And then now we got the auto, the student, and the mortgage. And let's just go back here. Yeah, I think I was doing this last time, this exact scenario, but Bruce Lee has that quote, I don't fear the man who does 10,000 kicks once. I fear the man who does one kick 10,000 times. Just got to do it over and over again, right? So 35, 35. All right. So now we got three debts: the auto loan, the student loan, and the mortgage. So even though most people would think, let's attack the student loan because it has the highest interest rate, why are we attacking the auto loan first? Because the auto loan will give us more bang for our buck in terms of cash flow. So I pay 11 grand, I get 460 in my cash flow, right? I pay this 328 grand, I get only 1400 in my cash flow, right? So let's pay off this 11 grand first. I'm going to do this, go here, and then I'm going to copy and paste. And then this is going to be plus 11024.64. And then I am going to do this. And then this is my auto loan is 0. And then now my cash flow, I don't know if you see this, let's go ahead and zoom it up, is $5,806.14. Okay, $5,806.14. And I'm going to copy and paste right here. 5806. 5806.14. Whoa, look at that. Look at that. Paid off the auto loan in 2 months and we're good. All right. So now, okay. So now it's 37 months. And then this is 167 plus 25, 192K. All right. And so let's go ahead and do this now in 37 months. What's the balance of the student loan? So this is 37. All right, so now let's take a look right here. 75 grand. Okay, 75 grand. Let's focus on this one. Can we move the whole 75 grand into the line of credit? We could, but look at the interest rate difference. And the higher the interest rate difference, the more you want to be careful and suspicious about moving the entire loan into a line of credit, right? If the cash flow isn't enough, and we haven't really talked about the cash flow index yet, or in this video, if the cash flow isn't enough when you pay it off, and the interest rate has a substantial difference, like in a 30-year mortgage, the best way to do it is what we call the chunking method, which is you just take a piece of the loan and move it into line of credit and rinse and repeat over and over again, right? So, for example, again, let's say we take 11 grand, okay? 11 grand from the student loan into the line of credit, right? So plus 11000, okay? Right. So it takes 2 months to pay off the 11 grand, right? And then you just rinse and repeat over and over again. Okay. Right. Right. So every 2 months we just move 11 grand and we chunk it. Yeah. 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 Now luckily I have this Velocity Banking calculator right here. So all I got to do is just type in the details of the loan. And if you want to know where I got this from Renata. So this is where I originally learned Velocity Banking from. But here's the thing. Not only do you want to learn velocity banking, because velocity banking is like a tool in your tool set, right? You want to learn, and here's the $1 million pitch, okay? Here's the thing where I'm gonna like pitch you, and then you give me your money or you give me your time and attention, and then you're gonna pay anyways because I make a couple $100s a month even if you don't buy from me, right? But here's the pitch, okay? You pay me the money, and then you might possibly learn a few things, okay? Does that sound good? Because here's what I learned from Renatus. Well, first of all, I understood credit, so I understood all how to get the credit. Well, I understood it. Next is that, oh, this is my mortgage. I paid it off in 2 years and 9 months. Well, the next thing is I did learn that velocity banking stuff, and eventually I did become the goat of debt payoff. But here's what's also really important, and what I've never really heard from the average person, which is learn how to buy properties at a discount, right? You take a look at this, and it's like, ooh, $100,000 discount at the peak of the market. And I know, I wish I'd done better, but $100,000 good enough for me. Okay. So if you want to learn stuff like that, you might want to think about taking Renata's classes. If not, that's cool. You just keep watching this stuff over and over again. All right. Let's go back here. So we just put in the details, information, $100,000, 100,000, $100,000. 75,266.69, 75,266.69. And then the interest rate is 6%, 10 years. And what's the payment amount? It's 1475.61. Okay. And then the income is, let me just go here. What's our income? It is 10,891.96. 10,891.96. Okay. And then what's our living expenses? It's all of these. It's everything except for the loan we're trying to pay off, which is 3,975.61. So 3,975.61. All right, paid off in 1 year. Sweet. All right, I got it. All right, so 37 points plus 12, which is 49 months. And 1110.21 plus 100. Wait, did I do this right? No, this is 292K. All right, so now, okay, this is 0. And then now all we have is the mortgage. So this is what I want to show you why you got to be a little bit careful with the mortgage. So a lot of people on the internet are saying, oh my goodness, you know, loans good. I mean, loans bad, lines of credit good, right? So let's say you had a 30-year mortgage at 0%, literally 0%. Okay. Now, obviously, if you use an 8% line of credit, okay, 8% line of credit, you're going to pay interest. Just like if I take out $1 from an 8% line of credit, I might pay like a couple pennies or just a pen. I don't know how much that is. But what I'm saying is the fact that if you have a 0% mortgage, after 0%, you're not going to pay more than $350,000, right? So interest rate does matter, but I'll say it kind of doesn't. Okay. And so a lot of people will freak out because you're like, oh my goodness, you're using an 8% line of credit to pay off a mortgage. You're just going to be totally ripped off. And I say, all right, well, let's just calculate the worst case scenario. Okay. Worst case scenario. So 30 years, 0%. And we'll take the original balance, which is 350,000. And we'll say that's the starting balance. And what's the payment? Payment is 972.22. 972.22. Okay. And we should probably update this because we usually want to pay out the mortgage last, so it should just be $2,500. But if I do $11,000 chunks, at least in this scenario, and help pay off a mortgage, literally a 0% mortgage, literally 0%, meaning that after 30 years I'll never pay above $350,000. And for some reason, I'm using this line of credit because I was just too excited about learning about velocity banking. What's the worst that could happen? Remember, we went from 0 to 8. Okay, you pay an extra $1,800. But this is the warning, okay? If you listen to the advice on the internet, the internets, where people are like, loans of credit, amortized interest, and lines of credit, simple interest. So you replace your loans. I'll say this. Let me replace this 350,000. So look how, like, even though we're at 8% and we're doing small chunks, it's really, yes, you are overpaying, but it's not that much. Okay. But if I do a whole replacement of the loan with the line of credit, I'm paying 62 grand more, right? We got to be careful of just giving very simplistic advice on the internets. Okay. We can't do that. We can't do that. That's irresponsible. Now, could there be times where, you know, I realize nobody's going to get a 0% 30-year mortgage, right? For the most part. But let's say we got maybe like a 2 or 3% mortgage, right? We could still use a strategy with the 8% line of credit, but to replace our low interest rate mortgage with the line of credit is a no bueno, right? We'll call it no bueno, right? So we got to be a little bit careful of the advice on the internet. And I know people who actually did this because they write comments on my channel and tell me, I kind of regret replacing my 2% mortgage with the 8% home equity line of credit. Ooh, that's painful. All right, so let's go ahead and do this. So I just got to replace this. And here's the other thing: what people don't realize. Okay, I'm going to go this here. Let's say I do $11,000 chunks. Okay, and I do a 30% line of credit. That's actually less than an 8% first lien home equity line of credit. So a 30% credit card will actually be a first lien 8% home equity line of credit if you're using the chunking method. Now, I'm not saying that you should do this, but I'm saying is that it's not all about the interest rate. That's all I'm saying, right? And a lot of people, again, it's a little bit too nuanced for them, so they just kind of give very simplistic, like, hey, this is the end all be all, lines of credit, loans bad. That's actually not true. Okay, actually not true, but you hear that a lot in unfortunately the online velocity banking space. So let's go ahead and do this again. 350,000. What's the current balance? And 1475.61. That's the payment amount. 1475.61. 30 years. What's the interest rate? It is 3%, and the current balance is 32. No, what month are we at? We're at 49 months. 49 months. Okay. 318 732.91. 318 732.991. And then what's our line of credit interest rate? We'll say 8, and then we'll just do $11,000 chunks. And then that's paid off, and bam, 3.4 years. Oh my goodness, look how easy that was. Oh my goodness. I do this so much that I think that most people are like, because they don't comment, must be an everyday thing for them. And I've called you out for not commenting too, but it's okay. I just think because you're so focused on the material, you don't have any time to comment. 7.48 years, we were debt free. Debt free. Oh my goodness. Debt free. Okay. It's a Festivus miracle. Festivus miracle. You ever watch Seinfeld? Here in my garage. Oh, actually, that's something else. Festivus miracle. Festivus miracle. Festivus. The story of Festivus. It's a Festivus miracle. All right. So, well, that's it for today, folks. Only the debt free will unfortunately watch this video, whereas everybody else is struggling. Is struggling. But the sad part is that everybody posts their struggles online, and then when you meet them in real life, they're like, "How are you?" "I'm fine." "How are you doing?" "I am fine." And people can't get out, they act like they're fine in real life, but then they post all their L's on TikTok. It's a weird universe that we live in. All right, well, that's it for today, folks. Have a great day, and I'll see you on the next video.